Welcome to the Deep Dive. Today, we're pulling back the curtain on a company that's probably touched your life in more ways than you realize. Block Inc., formerly known as Square. You know, if you've ever paid a small business with one of those little white card readers, or maybe used a digital wallet to zap money to a friend,
Right?
you've likely interacted with them. We're going deep today, uncovering the layers of this major financial tech player.
That's the plan. Our mission here is really to give you a comprehensive look at Block. We'll cover everything from, the basic business model to their financials.
And even what big names like Warren Buffett see in them.
Exactly. We've waded through, a lot of source material, articles, data to pull out the really important stuff for you.
Think of it as a shortcut to getting informed. We'll throw in some surprising facts, maybe a little humor too.
And just to be clear up front, this deep dive, it's purely for your education and information.
Yeah.
All the analysis, it's based on public sources. Things can change, interpretations differ.
Definitely.
So absolutely not investment advice.
Okay, so scope-wise.
We'll hit their two main ecosystems, Square and Cash App. We'll look at the challenges they're facing, their cost structure, the leadership.
Jack Dorsey.
Yeah, him. And finally, what the numbers and those big investors seem to be telling us.
Okay, let's unpack this. Block Inc. It isn't just one thing, is it? It feels like two huge ecosystems working together.
That's a great way to put it. They really operate through two core, distinct but also complementary ecosystems.
Right.
So first, you've got Square. That's all about merchants, payment services, those card readers you mentioned, point-of-sale software, tools for sellers.
Basically empowering businesses.
Okay, the business side.
Then you have Cash App. That's the consumer side. Peer-to-peer payments, yeah, but it's grown into a much broader digital wallet. Investing features, even Bitcoin trading.
Wow, that's a lot already. But wait, they also own Afterpay, the buy now, pay later service?
They do.
And Tidal, the music streaming thing. How do all these pieces fit together and actually make money? Yeah, it gets interesting there. The revenue comes from a few places. Mostly transaction fees. That's from Square seller payments and Cash App payments.
Makes sense.
Then there are subscriptions, software services, selling the hardware like the readers, and a pretty big chunk from Bitcoin trading on Cash App.
Okay, so give us the numbers. How big are we talking?
Huge. In 2024, Block pulled in $24.12 billion in total revenue.
$24 billion.
Yep. And Cash App was the big driver there, bringing in about $16.25 billion. That's like, 60-some%?
Like two-thirds, yeah.
While Square, the merchant side, generated around $7.68 billion, so about 32%. And crucially, Cash App drove something like $10.2 billion just in Bitcoin revenue in 2024.
Okay, so Cash App is clearly the big earner in terms of sheer dollars coming in. But I always hear, high volume often means lower margins. Is that true here?
That's exactly the dynamic.
How does that shake out profit-wise compared to Square? And who are we talking about customer-wise? How many people use this stuff?
You nailed it. Cash App brings in the revenue volume, but if you look at gross profit, the story shifts a bit. About 58% of gross profit comes from Cash App and 42% from Square.
Ah, okay. So closer.
Right. It confirms that Cash App is higher volume, but Square, while smaller revenue-wise, contributes more significantly margin-wise per dollar. It's that classic volume versus margin trade-off.
Interesting.
Customer numbers. As of 2024, they reported around 57 million monthly active users on Cash App. 57 million.
Wow.
And on the Square side, about 4 million active sellers using the platform. Plus, millions and millions of those Square hardware units sold over the years. And Cash App keeps adding users like crazy. I think they added something like 27 million new users back in 2020 alone.
That growth is just phenomenal. But, no company, especially one growing this fast, has a perfectly smooth ride.
Yeah.
They must be facing some headwinds, right?
Oh, absolutely.
What are the bumps in the road they're hitting right now, the short-term stuff? And what about the bigger, maybe more structural risks they need to keep an eye on long-term?
Yeah, so short-term, Block is actually quite sensitive to the wider economy, macroeconomic conditions.
Like consumer spending.
Exactly. They've even mentioned macroeconomic headwinds, specifically when they cut guidance recently. Look at Q1 2025, their revenue actually dipped about 3% year over year, came in at $5.77 billion, missing forecasts.
Ouch.
And it ties directly back to people maybe spending a bit less. You skip buying that coffee using a Square reader, or you send less money on Cash App. It adds up and hits their volumes.
Right. It connects directly.
Plus, there's always intense competition and just general cyclical slowdowns in retail that affect the Square side.
And the crypto market. You mentioned the big Bitcoin revenue, but that seems like a massive headache sometimes, doesn't it? Though couldn't you argue their early Bitcoin bet positions them well if crypto does go mainstream?
It's definitely a double-edged sword. You're right. A crypto volatility, it causes huge swings in their financials short term.
How so?
Well, in Q1 2025, they had $2.43 billion in Bitcoin revenue. Sounds great, right? But the gross profit from that, only $68 million.
Wow, tiny margin.
Tiny. It shows how price swings really hammer the profitability of that segment. A lot of that Bitcoin revenue is just pass-through, high volume, very low margin. Plus, things like rising interest rates can slow down the buy now, pay later activity with Afterpay.
Okay.
But to your point, yes, if Bitcoin stabilizes, if it finds wider adoption, Block's early infrastructure and integration could absolutely be a long-term strategic advantage. They're already there.
Okay, so that's the short-term turbulence. What about the bigger picture, those longer-term risks that could really change the game for them?
Right, the structural stuff. A big one is regulatory scrutiny, compliance.
Ah, the regulators.
Yeah.
Always watching fintech.
Always. Block has faced investigations, SEC, state regulators like New York's DFS, particularly around Cash App and banking rules.
Why is that so critical?
Because stricter rules think anti-money laundering, know your customer. Maybe new limits on buy now, pay later could force changes in how Cash App works. It could increase their costs significantly or even limit how fast they can grow.
Okay. What else? Then there's just the whole payments landscape potentially shifting. You talk about central bank digital currencies, right?
Yeah, CBDCs.
Or even just more pressure squeezing fees down across the industry.
Yeah.
That could really eat into their main revenue source, those transaction fees.
Right, the core model.
And that Bitcoin risk doesn't go away long term either. A major crash or a real turn in consumer or regulatory sentiment against crypto, that could permanently slash profitability from that segment.
Makes sense.
And finally, just competition. New payment tech popping up, maybe big tech giants making bigger plays in finance. Plus, the risk that some of their own new ventures, Afterpay, Tidal, Proto, just don't pan out as hoped.
Okay, so behind all this revenue, all these risks, there's obviously a cost to doing business.
Yeah.
How does Block actually spend its money? Is it mostly fixed costs, or does it scale up and down with volume?
It's a mix, really. Some costs are definitely variable, directly tied to volume. Think transaction fees, they have to pay out card networks, digital currency costs for Cash App. Those go up as they process more money. The cost to manufacture the hardware, the readers, that's variable per unit. And parts of marketing, like customer acquisition costs, have variable components too.
But it sounds like they're really pouring a ton of cash into building things, into innovation and scaling up. What are the big fixed costs?
They really are investing heavily. That's where the bulk of the costs lie, in fixed or semi-fixed areas, especially product development, their R&D, and SG&A, sales and marketing, general and admin.
How much are we talking?
R&D alone was almost $3 billion in 2024. $2.914 billion to be precise. That nearly doubled in just 4 years.
Wow.
Sales and marketing was close to $2 billion, G&A around $2.15 billion. These costs, they don't just track short-term volume swings.
This is like building the infrastructure first.
Exactly. Think of it like building a giant factory. Huge upfront cost, but once it's running, the cost per item made can drop significantly. Block needs serious scale to make these big investments pay off long term.
Right, leverage.
Yeah. If they get that scale, the profit potential per transaction could be huge. Now, they can cut some discretionary spending if things slow down, but that core R&D, that tends to stay high for future growth. And honestly, their fixed costs did outpace revenue growth in the 2022-2024 period.
Okay, so who's steering this ambitious ship? Let's talk management, especially with a founder like Jack Dorsey still right there at the top.
Yeah, the leadership is definitely notable. Jack Dorsey, co-founder of Twitter, to remember. He's Blockhead, chairman, co-CEO. And importantly, he owns about 10% of the Class A shares.
So he's got skin in the game, a lot of it.
A lot. It aligns him directly with long-term shareholder value. You also have key longtime execs like Amrita Ahuja, she wears multiple hats, president, CFO, COO, and Christy Esperanza as chief legal officer.
How transparent are they? You mentioned they cut guidance.
Generally, they seem pretty upfront about challenges. Cutting guidance in May 2025, citing those macro headwinds, is an example. They also face that activist short seller report from Hindenburg Research back in 2023.
Right, I remember that. Allegations about inflating metrics.
Yeah. But Block management pushed back publicly, refuted the claims, and said they were cooperating with regulators. It suggests, an open response rather than trying to sweep things under the rug.
And the alignment, besides Dorsey's stake.
It seems strong. Other executives also hold significant equity. And Dorsey himself has famously pledged to give away a lot of his wealth, but he continues to hold his Block stock through thick and thin, which is telling. They even took pay cuts during the early COVID uncertainty.
Okay, let's get to the bottom line, the financials. What do the numbers really tell us about Block's journey so far and its current health, especially with all this growth and investment?
Well, the revenue growth story is undeniable, super rapid, averaging maybe 30–40% a year before 2022. Then it slowed, it still rebounded, 25% growth in 2023, 10% in 2024.
Still strong growth.
Yeah. But profitability, that's been much more volatile. They were mostly losing money operationally speaking in the early years. They only just turned an operating profit in 2024.
That feels like a pretty big milestone.
It really is. It's like that shift from just burning cash to actually making money on the core business. Super important for long-term sustainability. Their net margin hit around 12% in 2024, which was a huge jump from basically zero the year before.
And the balance sheet? How does that look? Debt? Cash?
Surprisingly strong. Almost conservative, you could say. Assets are way higher than liabilities. $36.8 billion in assets. They've got around $9 billion in cash.
$9 billion in cash?
Roughly, yeah. And debt is only around $4 or $5 billion. So their debt-to-equity ratio is quite low, like 0.24. Tons of financial flexibility there.
And they don't pay dividends, right? Reinvesting everything.
Correct. All cash goes back into growth.
So with these financials, rapid growth, finally hitting profitability, strong balance sheet, it begs the question, what do the really savvy investors think? You mentioned Warren Buffett's Berkshire Hathaway actually bought Block stock. That seems kind of surprising for Buffett. What's the story?
It is interesting, isn't it? It shows different investment approaches. Berkshire, the quintessential value investor, started buying Block while it was still Square then, back in mid-2021.
Okay.
By late 2023, reports showed them holding around 8.3 million Class A shares. Now, the interesting part is his cost basis was apparently around $197 per share.
$197. Wow, the stock's been way below that for a while.
Exactly. So he definitely incurred some significant paper losses. But as far as public filings show, heading into mid-2025, it looks like Berkshire is still holding. They haven't sold.
Which suggests?
It suggests a very long-term conviction, looking past the short-term price swings. Other value guys like Seth Klarman, Bill Miller have also held positions at times.
But not everyone agrees.
Right. Contrast that with someone like Cathie Wood, more of a tech growth investor. Her funds bought heavily in 2020-21, but then sold out by 2022 after the stock tanked. So you see a real divergence in how different investors value Block.
This leads right into the big valuation question. What does all this mean for Block's intrinsic value? Especially with all these moving parts, Cash App growth, Bitcoin Square margins, and that intrinsic value estimate you hinted at earlier, it sounded quite different from where the stock is trading. Some might argue, that a simple DCF doesn't capture the full picture for a disruptor like Block. How do you account for that?
That's the multi-billion-dollar question, isn't it? And you're right to bring up the limitations of DCF. So let's try a Buffett-style discounted cash flow analysis. We're basically trying to estimate future owner earnings.
Owner earnings. Remind me what that is exactly.
It's essentially the real cash profit left over for the owners after the company has made all the necessary investments to maintain its competitive position and operations. It's often seen as a more realistic measure of earning power than just reported net income.
Got it. So what does the DCF model spit out?
Okay, let's run a conservative scenario. We use the estimated 2024 owner earnings, about $1.8 billion. Assume a pretty modest 5% annual growth in free cash flow going forward. Use a 10% discount rate, standard practice, and a 2% terminal growth rate.
Okay.
That calculation gives us an intrinsic equity value for Block somewhere in the range of $24 to $28 million.
Billion, okay, per share.
That translates to roughly $38 to $44 per share. Now, if you want a margin of safety, say 30%, like Graham and Buffett often advocate for,
Well,
your theoretical buy price, based on this conservative DCF, would be down around $26 per share.
$26, wow. Okay, but back to my earlier point, does that conservative DCF miss the disruptive potential, the optionality?
Yeah, absolutely. That's the key critique, and it's valid. A standard DCF is inherently conservative. It values what you can reasonably forecast based on current operations and modest growth. For a company like Block, a lot of the excitement, and frankly the current stock price, is based on potential. Potential for Cash App to become even bigger, potential for Afterpay to dominate BNPL, potential wins from new ventures, potential crypto upside. Things that are really hard to plug into a spreadsheet with high confidence.
So the market is clearly pricing in a lot more optimism than that $26, $44 range.
Oh, definitely.
So the current price, around $75 a share.
Yeah.
how does that compare to the DCF value? What does it imply?
Well, $75 is about 3.2 times that conservative fair value range we calculated. So from a strict conservative DCF perspective, it suggests a pretty low margin of safety at current prices.
Right.
Flipping it around, if you assume today's $75 price is the fair intrinsic value, you'd need to plug in much more aggressive growth assumptions into the model to justify it. We're talking maybe implied returns of 15–17%, but that requires Block to grow its cash flows very substantially and consistently for a long time.
So it really hinges on your assumptions about future growth, especially for Cash App, Bitcoin margins, Afterpay.
Precisely. Your view on the intrinsic value heavily depends on how optimistic you are about those key growth drivers and margin improvement.
Okay, let's bring it back to the present. How did their latest earnings, Q1 2025, reflect these trends we've been talking about? Did they show the growth needed to justify the price?
Q1 2025 actually showed some of that continued pressure we discussed. Revenue came in at $5.77 billion. That was down 3% from the year before, and it missed analyst estimates.
Down 3%.
Not great. Not ideal. Profitability looked okay. On the surface, net income was about $0.96 billion, but that included a $93 million loss on Bitcoin remeasurement.
The accounting hit from Bitcoin's price dropping.
Exactly. It's not a cash loss from operations, but it reflects the paper value decrease of their Bitcoin holdings during that quarter. Adjusted earnings per share, $1.56, was also below what analysts expected, and gross profit dipped overall as transaction volumes weakened.
What about the specific segments? Cash App, Square.
Cash App users held steady 57 million monthly actives. And importantly, the gross profit per user actually went up 9% to $81. So they're still monetizing that base effectively.
Okay, that's positive.
Afterpay also looks strong. Gross merchandise volume up 19%, gross profit up 23%. But again, that Bitcoin revenue line, $2.43 billion in revenue, only $68 million in gross profit because of the price volatility. And the Square side, the seller business, saw volume and revenue decline compared to the previous quarter.
And the outlook, what did management say?
They cut their full year 2025 gross profit guidance, again, pointing directly at weaker consumer spending. But they are projecting some modest growth returning in the second half of the year. They're betting on, expanding Afterpay and rolling out some new AI initiatives to help kickstart growth again.
Okay, so pulling all these threads together,
Mm-hmm.
the two ecosystems, the risks, the costs, the leadership, the volatile financials, the valuation debate. What's the ultimate takeaway for someone trying to understand Block?
Well, Block is clearly a fast-growing, innovative fintech company. They've built significant scale in both consumer and merchant spaces, and they have a remarkably strong balance sheet, which gives them options.
What?
But historically, profitability has been very inconsistent. It seems to be improving now, turning profitable operationally, which is key. But it's been a bumpy ride. That unique market position, the founder-led aspect, it might justify a premium valuation in some investors' eyes.
Get the numbers.
Yet the numbers, especially profitability and cash flow, have fluctuated a lot. And as our conservative DCF showed, the current market price seems to bake in a lot of future success already, potentially offering a lower margin of safety today compared to a few years ago. It really depends on continued strong execution.
Right. Our goal here at the Deep Dive, as always, is to help you connect those dots, gain that knowledge quickly and thoroughly, and hopefully give you some aha moments without drowning you in data.
Absolutely. And let me just reiterate, this content is purely for educational and informational purposes. All the financial data, the analysis, it's based on publicly available sources. Things change, interpretations differ.
Crucially.
It is absolutely not investment advice. Please conduct your own due diligence. Talk to a licensed financial advisor before making any investment decisions. Nothing here is an offer to sell or a solicitation to buy any securities.
And hey, if you find this valuable, please like and subscribe. We're on Apple Podcasts, Spotify, and our YouTube channel, Deep Value Investing. Check the episode description, too. We've got a great value investing book list there.
You can also support the channel and help us develop a cool Buffett indicator app. There's a GoFundMe link in the description, gofundme.com/after turning Buffett's wisdom into a daily tool for investors. We'd really appreciate any support.
Okay, and now, as we wrap up, a final thought for you to chew on. Given Block's really aggressive spending on R&D in these new ventures like Afterpay and potentially others, and considering that historical volatility in its profits, how much growth does this company truly need to deliver year after year to actually justify its current valuation? And maybe more importantly, how long can they realistically sustain that kind of high growth in such a fast-changing competitive market? Something to think about.